happens when your disability claim straddles two insurance companies when your employer changes carriers? Now, it's not uncommon for employers to change disability carriers, but what happens if you become disabled during the period of time in which your carrier is being changed by your employer? Which carrier, if any, will pay you benefits? What happens if both carriers deny the claim? What do you do? Now, this is a bit of a factually complex issue and a policy complex issue. So bear with me because facts matter and the terms of the policy matter. In this particular case, Mr. T faced this problem when he became disabled due to trigeminal neuralgia, and he had surgery. He worked for Becton Dickinson and Company, BD, and they had a disability plan that was insured in 2016 by Standard, and in 2007 changed to MetLife. He first went out on disability on November 9, 2016. Write that down. He was on short-term disability through December 22, 2016. Write that down. He returned to work as a product development engineer on December 23, 2016. So write that down. He then had a relapse that took him out again on January 12, 2017. Now remember, the carrier changed in 2017. So write that down. Mr. T exhausted his short-term disability claim and then filed a long-term disability claim with Standard. So guess what Standard did? Standard said, oh no, we're not going to pay you any benefits because you weren't covered under that policy. Really? Not to be outdone, Mr. T filed a claim with MetLife. And they said nothing. They ignored him. So then he sued Standard, MetLife, and the plan. Now, during litigation, he settled the Standard claim, and Standard's policy had a provision called the effects of recovery. This is an important term in a disability policy. So if you're facing this situation, you need to get out your policy. This provision said that no long-term disability benefits would be payable after benefits became payable to you under any other disability insurance plan under which you became insured during your period of temporary recovery. That's a lot of words, isn't it? Now, this is an interesting provision because many policies and plans have a provision that says if you become disabled again because of the same condition for which you are collecting benefits, and you do so within a specified period of time, normally 60 to 90 days, you're entitled to your benefits. That's called a recurrent disability provision. However, in this case, the policy had a twist. And the twist was that if there was a new policy under which you become insured during this period of time, this recurrent disability provision, there was no coverage. Now that's amazing. And you can see why you have to get out and review your own specific disability policy or plan because there's no uniform policy or plan. As I said, this case is fact specific and policy specific. This case ultimately went to the Fifth Circuit in the case of Mr. Talamantes versus MetLife. And it's a Fifth Circuit case that came out in June of 2021. Now, the court rejected MetLife's argument that Standard was responsible for the payment of benefits because MetLife had argued that benefits were never payable under their policy and that he was only eligible for coverage. Okay, that's an interesting twist. Well, what did the policy say? The 2017 MetLife policy explained that coverage took effect when an employee was covered under a prior plan, which was here, and was actively at work on the day before the replacement date. Well, remember I told you to write down dates? The court noted that the replacement date was January 1st, 2017, and he worked through January 11, 2017. So the court reasoned that MetLife's interpretation was dependent on the merits of each disability claim and that the plan beneficiaries would never know if they had coverage or not until they litigated the case. The court said, oh, no. The purpose of ERISA, which governed this claim, is to bring uniformity to the claims process. And MetLife's interpretation led to uncertainty. Now, the court also looked at the Standard policy language. That language was clear that the benefit coverage had shifted from Standard to MetLife based on the circumstances of this case and the language of the policies. Mr. Talamantes' Standard coverage ended when the new plan became effective January 1st, 2007. He was actively at work and disabled on January 11, 2017, and he was covered under the MetLife policy. Now, in my opinion, this is a correct decision based on the facts and the policy. But I will tell you, it's not uncommon for disability carriers to point the finger at each other and say, we're not responsible, you are. I don't want you to let your disability carriers rob you of your peace of mind. And you can see that this is a fact-intensive, policy-intensive issue. If you have this type of situation, you need to consult with an experienced ERISA disability attorney who's going to want the facts, the medical chronology, the return to work chronology, and the terms of the policy so they can try to figure out this interesting dilemma.